anything?
Nothing, not a thing.
Are you sure he didn't say something else? Something you've forgotten?
Look, he said it would be buried under a big W and that we'd see it.
Yeah, well, it's got to be here.
Look, I tell you what we do. You go the way we came, and we'll go the way you came. Well, we might have missed something. Hold it. You go the way we came, and we'll go. That's right.
Yeah.
Okay, let's go.
Today we're going to take a look at one of the most powerful bullish chart patterns, the W, or double bottom. All right, the W pattern or the double bottom pattern. This is what it looks like. This is what you're looking for on a chart. So you're looking for a low to be set, followed by a bounce up here to a certain level, and then the most critical part, another low being set that's approximately the same as the previous one. So a double bottom, a bottom that is almost the same as the previous one that was set, followed by another move back up. So again, we've got our W right here, W, followed by a move back up, and the critical line is this right here, this orange line, this neckline or resistance line. So we're waiting to see an actual break above that. If we fail to break above it, then it's really not a valid W pattern. It could drift back down again. If we do break above it, this could be a sign it's a valid bullish W pattern. Now keep in mind that over half the time, according to Thomas Bulkowski, 57% of the time on these breakouts, you're going to see actually a throwback to the neckline here. That's okay. That's pretty common. You're not always going to see a straight shot up after you break the neckline, but then it should resume course after retesting this neckline, right? So again, it's two bottoms, a neckline is formed, you're waiting for the breakout of the neckline, there could be a throwback, and then you should go higher. So let's jump into an actual chart to see if we can identify a W pattern and walk through exactly how these things look and work. So here's the current chart for Ethereum. And this is the 4-hour chart, but let's move it over to the daily chart. So this is the daily chart for Ethereum. And hopefully you can clearly see the W pattern that is formed here. So let's just go ahead and show you right here. So you can see the W pattern, and you can see also break above it. The neckline is clearly defined here. So now the neckline is always a little bit, you have to be prepared to adjust it a little bit depending on the time frame you're looking for. So on the daily chart, if we want to go by the actual closes, the neckline would be right here around this 2300 level. Safer though would be to take the wicks into consideration. You can also see if we do that, we're lining up over here with this close too. So for this one, the safer neckline is around the $2,400 mark right here. So again, where you kind of figure out this mid peak can be an art form sometime, and a lot of times it's good to take it down to the lower charts to see. So if I take this down to the 4-hour, I can see that this is actually a much better place to draw my line here. Again, right around this $2,400 mark, right? So when you're trying to calculate the W pattern and where this point of contention might be, this neckline, look at multiple time frames for your charts. Again, I started off on the daily. I went down to the 4-hour. If I go down to the hour, it's even clearer that this is a really good spot for our neckline because this mid-peak went right up to this point here, right? So when looking at this W pattern, we set our neckline around $2,400, and what we're looking for then is a clear break above this neckline. Again, the higher the chart time frame, the better to confirm those breaks. So on the 1-hour, you see here, we went barely above it, but we didn't close above it, so that really wasn't any kind of confirmed break of this neckline. So you would have been smart to actually buy here. But as we move along, we see again, we have a couple little fake outs. And it wasn't until we got clearly above here and had a couple hourly closes above that this is a confirmed breakout. And if we had looked at the 4-hour chart earlier, we would have seen the same thing, or the daily as well. So until we had this daily close above here, we couldn't really be confident there was a breakout. Okay, so this is a really clean W pattern that you can see here for Ethereum. And again, we want to see, we set a low down here, we came up bulls came up here, came back, set another low, and if I draw a trend line here, you can see it's almost perfect. This is about as clean a W pattern as you're ever going to find. So this one's perfect. They're not always going to be this perfect in dimensions, and this is also over a 6-week span here too. So especially if you're talking about crypto, that's a really long time. So a 6-week W pattern, this clearly formed, is about as obvious as you can ever be for a W pattern. So let's figure out now what our target is for this kind of a breakout. So for that we're going to go ahead and measure from the bottom to the top. So from the bottoms here to the neckline. And this is our ultimate price target. If we do that, we can see we've got a price target of over $3,100. So again, a really nice potential profit point here from $2,400 to $3,100 once it's fully realized. This particular one is still working its way up. It's not completed yet, but that would be the ultimate price target. And that's the easiest way to calculate these price targets. When you have a confirmed breakout, is taking the bottom of the W to the top and then adding that to the top of the neckline. Now, Bulkowski recommends only taking 67% of that increase. So in his world, we'd be down closer to about here. So it's up to you as to how aggressive or conservative you want to be with these breakouts. If you want to be more conservative, set a price target that is 67% of where it would be otherwise. So, and if you want to be more aggressive, then you can go up to the full 100% of the height here for the breakout. All right, so let's see if we can find other examples. Let's see if we can go through other W pattern examples. I've switched over to the Bitcoin chart, and here's one on the hourly chart from back in May of 2021. This one isn't quite as clear and easy to spot as the one we just walked through, but you can see W pattern right there. So this is on a 1-hour chart. They're not always as perfect as the last one I showed you, but we can clearly see we've got a neckline, let's say up around here. And we've got two bottoms, relatively equal in price. Our neckline is set up here. So what we're looking for is a breakout above this. A couple things to note about this one. You can see that we had a lot of volume on this first drop down and less volume on this second drop down. That's another thing to look at with these W patterns, is that typically you see more volume on the first drop than on the second. So that's just another kind of indicator to look for to see if it's going to be a valid W pattern. So you want to see less strength on the second drop down than on the first. And again, you can see more volume here, less volume here. So in this case, price shot well over the neckline quickly, and as we mentioned before, it actually threw back, retraced, and touched the top of the neckline here before moving higher. And if we look at our price targets for this, if we look at these two candles here, it's probably about right here. So we would be looking at a price target up here. So in this case, you can see we retraced, but then we actually went up and surpassed our price target pretty easily. Here's another one just right over here. So again, we got W pattern like this. In this case, this is a good example because you can see they don't always have to be completely level. So in this case, we've got kind of an angled neckline, and you can see also this is angled here. So you can have these tilted W's as well, but it works the same way. You're still looking for a breakout above the neckline, and in this case, again, we met the target price pretty easily. And again, you can also see how we retrace back to to the top of this neckline, the support line, before we moved ultimately higher. So the key with these is sometimes you'll see a quick breakout. Don't get too concerned if you see the price throw back a little bit towards the neckline. That's normal, and it should resume back up. It's not always going to be a straight shot. In fact, most of the time you do get some sort of retracement before it moves higher again. So those are a few examples of W pattern. So believe it or not, all technical analysis is based on market psychology. Even though the patterns we talk about can seem magical, the reasons the scenarios play out so often and so predictably is they're all based on human nature. In the case of this W pattern we were looking at, it's a sign of capitulation ultimately by bears. So in the first move down, they had a pretty good amount of volume here, went down, set a low. Bulls tried to take the price higher and failed at this point. Bears once again tried to push price down lower, but unfortunately, they couldn't go any lower than the previous low they set before. So this is the first warning sign if you're a bear that, oh no, maybe we're not really in control here. In fact, as we moved lower here, volume was much less than it was before. So bears start to feel less confident. Bulls start to feel more confident because they see there's less volume on this downward move, and they also see that bears couldn't take it any lower than they took it before. So then once price moves back up, this is the point of contention. If the bears succeed in taking it above this previous peak, they're firmly in control. If they fail, the bears are going to feel more confident in taking it back down and potentially taking it lower than it was before. So that's why this neckline is so critical when you see these W patterns. When you start to see a close above this level, that's when you can start to feel this is a legitimate bullish W pattern and we'll be looking to go higher. So just to summarize a W pattern again, you're looking for equal sides. You're looking for a double bottom scenario. These two bottoms should be relatively close to each other. They don't have to be perfectly on the same line, but very, very close. They don't necessarily have to be this level, as I showed you in the previous example. It can be a tilted W, but the neckline is the most important thing. You're waiting for a confirmation above that neckline. Your price target is going to be either 100% of this total height above the neckline or 66% of that neckline, depending on how conservative you want to be with your price targets. This pattern works on any time period. It can be 15-minute chart, hour chart, 4-hour chart, daily chart, weekly chart. But the higher the time period, the more confident you should be in this succeeding. And also the length of the time period for the total pattern is important too. The longer the time period that you see this W pattern laying out, the more confident you should be that this is legitimate. If it's a really short time period, there's a lot more margin for error in this. So I hope you enjoyed this explanation of the W or double bottom pattern. If you did enjoy it, please like the video. Subscribe to this channel, that helps us a lot, and get notifications so you're alerted every time we post a new video. Until next time.
Why, that's it. Sure. Look. It's a big W, I tell you. It's a big W. Look at it. I told you.